Should we do it?
Sure, let's go.
All right. So thank you everyone for joining. We're excited to have this joint webinar for DoorDash and Caviar. It's our first time doing a webinar for both of these companies combined. As you all probably know, they're now under one umbrella. So it makes sense to do this webinar under one umbrella as well. And yeah, we're really excited to answer all these questions. We know taxes can be confusing. We know it can be expensive to talk to a tax professional. So we hope that in this webinar, you'll be able to get some of your questions answered and start to feel a little more comfortable as you start to think about doing your taxes. So yeah, we'll get started. So I'm presenting here with Knox. And yeah, we'll get started with some introductions and an overview of what today's schedule is going to be like. So yeah, it's going to be really simple. Knox and I are going to introduce ourselves. Then we're going to get right into the top Dasher and Courier questions. And then we're going to tell you some great next steps for, okay, now I'm ready to file my taxes. What are some great ways that I can do that easily and while saving money? And then we'll share some other fun resources and helpful resources for you. All right. So for the intros, my name is Hako. I'm the head of partnerships at Everlance. And I'll tell you a little bit about Everlance here in the next slide. So Everlance is an automatic mileage and expense tracking app. So hopefully you're familiar with this if you're a Dasher. Maybe you're not. If you didn't know, now you know. Basically it's a great way for you to track all your business mileage and expenses, which can help you lower your taxes dramatically. So we're gonna get into that. But yeah, we like to, think that we're pretty easy to use and things like that. So yeah, we're excited to get into this. And this is a little bit what the app looks like, but we're not really here to tell you too much about, what Everlance is like. We're here to really answer your questions. So we're going to get right into it, and I'll let Knox introduce himself.
Cool. So hello, everyone. I'm Knox Wimberly. I am the Chief Tax Officer for a company called Happy Tax and serve as the Chief Tax Officer across all of our brands, some of which you may have heard of, many of which you may not have. But why am I here? That's really the real question. So I am one of America's tax experts. I teach primarily other tax professionals all across the country. And I was in Europe once this last year, but mostly across the United States because I teach U.S. taxation. My areas of expertise are in the gig economy, or what some people call the shared economy, as well as in cryptocurrency, cannabis, and also some other things too. But those are sort of my primary areas of specialty, although I'm a bit of a generalist too, so you're not likely to throw me a question I don't know the answer to. But I'm just glad to be here. Bottom line is we want to help you out, and we want to make sure that everybody has the best possible advice that you can have. So as Hako mentioned earlier, if anybody has questions along the way, feel free to throw those into the chat, and we will do our best to answer each and every one of them.
Yeah, so as Knox mentioned also, he really is one of America's foremost tax experts. So we're all really lucky to have him here with us. And then I'll say I'm not a tax expert. I'm someone who's been working in the tax space for people like DoorDashers and Couriers for the last 2 years. So I sort of know about taxes from the side of like a Dasher, let's say, someone who's like actually living that experience and thinking about what that is like. So I'll try to answer some things from my perspective, from everything I've learned. Hopefully I can break some things down into like really simple, language that is more common. And then Knox is really at the expert level. And of course, he's also really good at explaining things in really easy to understand ways. So Knox, so the first question is, what are the main differences between employees and ICs, which is short for independent contractors or self-employed?
Yeah, so great question. And this is actually one of the very first things we need to understand. So I'm glad you chose this question to be first. So as an independent contractor, you own your own business, meaning you're your own boss. When you're an employee somewhere, you get a W-2. They tell you when to come to work. They tell you when not to come to work, right? So you have a set schedule. They tell you what you're going to do. In this case, as an independent contractor, you set your own hours. You choose when you're going to log onto the app and work, and you choose when you're not. So the tax form's a little different too. W-2 employees, you get taxes taken out of your paycheck. So you have these things called withholdings, And then you also have Social Security and Medicare that is basically taken care of. We call that FICA, that comes out of your paycheck. And so all of that is withheld along the way throughout the year. As an independent contractor, they do not withhold any of that for you. And so we're going to talk as we move through the webinar a little more today, what that means in terms of what that's going to look like for you as you prepare your taxes and what you need to do to be best prepared for 2020 as well. So we're going to do a little bit of what do we need to do to take care of the 2019 taxes that need to be filed, but also Everlance has actually just come out with a great new tool that's going to help you in doing some tax planning to make sure that you set aside appropriate amounts for the coming year. So, Hako, you didn't know I was going to tell them that, but I'm sure you'll want to do that before we get off the webinar today, because that's
that's a good reminder. Yeah, thanks, Knox. And also just want to shout out to people that are starting to already put some great questions in the chat and getting some back and forth going. So I just want to encourage that. I think the more interactive this can be, the more helpful it'll be for you. So cool. So the next question that I see a lot when I look at the RSVP questions and that I hear from Dashers and Couriers all the time is, what are the top expenses that I should track and deduct on my taxes? You want to take these, Knox?
Sure, I can. So yeah, the number one expense, and actually Everlance is going to help you a ton with this, is tracking your car expenses. So we're going to talk more about how we do this, but this involves a lot of different things included in the car. So we'll talk specifically about what those are. But we also want to be able to track your phone plan, your accessories. So this is a little bit confusing to people because you can't take your entire household phone bill. So you got 5 people living in your house, right? You know, yourself, maybe a spouse, 3 kids, something like that. You can't say, hey, I've got 5 people on my phone bill. I'm going to deduct the whole phone bill. Never going to fly. But what you can do is say, hey, I cannot do this work without my smartphone. I mean, if I don't have this, I can't even log in the app, right? I just can't do it. So we can make an argument that your phone is very, very important. We could even make an argument that it's important that you have an up-to-date smartphone. So when you bought that phone, that is something that could potentially be deductible. Your phone bill could potentially be deductible. Again, though, we're going to take the percentage that is yours. So for example, we talked about 5 people on your phone bill. You're 1 person. You're going to be 20% worth of that bill. And then we're going to split that down a little bit further into, you know, how much was personal, how much was business, that kind of thing. We may talk more specifically about that if people have more questions along the way. But then also your car mount, your charger, all of the things that are required for you to really be able to do this work, we're going to be able to include and track and deduct. So that becomes really, really helpful. And then the other thing is that in many states, including California, for example, but in many states, you are required to have inspections in order to do your work. So if it's required by your employer or if it's required by the state in order that you can do your work, then those are things that we can track and deduct as well. Anything else you want to say about that, Haka?
I just want to throw in that there I wrote any inspections required by DoorDash, and of course, if they're required by Caviar, that applies as well.
Cool.
Yeah.
Yeah, so there's also some other things here, right? Hot bags, coolers. If you are doing deliveries, as you all are, this is something that you pretty much have to have, right? You can't do your work without it. So when you buy these things to keep the food hot or cold, keep track of those receipts because these are things that are going to help. And the great news is Everlance can help you to do that too. One that gets missed a lot is tolls. So even if you take the standard mileage deduction, and if you don't know what that is yet, don't worry about it. We're going to talk about it in a little bit. But even if you take the standard mileage deduction, you can, on top of that, deduct your tolls and your parking. So if you pay for parking and don't get reimbursed, for example, then you can deduct that. If you have to go through tolls and you don't get reimbursed for that, you can deduct that, absolutely. And so these are things that we want to do. And then obviously we want to track our mileage. And Everlance is a great app to do that. There's some other ones out there too. One of the reasons I really like Everlance is it is not only mileage, it will also help you to track some of your other expenses. So you can track those other receipts and those sorts of things inside of Everlance as well, where I know that some of the competitors may not be as full featured. So I can say that. Hako won't because he works for Everlance. I don't, so I can say that. Other things that we want to mention as well, roadside assistance. You may need to make sure that you can keep going. And so you get AAA or some competitor out there, some other motor club, that can potentially be deductible. Health insurance. So we need to talk about this for a minute. If you are able to have health insurance from another employer, so some of you, for example, have a W-2 job and then you also do DoorDash or you do Caviar on the side. And if you do that, that's okay, but you're not able to then deduct your health insurance on the side job because you were able to get it through your employer and it's probably already deducted there. In other words, you don't get the double deduction, right? But if you do not have it through an employer or do not have it through a spouse, then you could potentially get a self-employed health insurance deduction. And so that can be huge as well. And this is where working with a competent accountant can really help you out to find some of those types of things to help you out for sure.
Yeah, and actually, Knox, if you want to go back to the last slide for 1 second, I just want to make like the big picture point. If you're not familiar with taxes, you may not even really know, like, why do we care about deductions? And the easy answer is so you can pay less in taxes, right? So anything that you deduct on your taxes are going to lower your tax bill. So if you normally get a refund, that means you're actually going to get a bigger refund. If you normally pay taxes, that means you're going to pay less taxes. So that's why you want to be tracking like the bigger expenses, things like your phone, things like health insurance that are more costly. Make sure you're tracking those because those are the ones that are going to lower your tax bill by the most. And I also want to shout out that on the chat, a few people are asking about, if I made less than $600, how do I file if I don't get a 1099? So we are going to get to that. I just want to point that out because I know a few people have that question.
Cool.
So yeah, the next one is, what are the first things I need to know about filing taxes as a dasher or as a courier?
Yeah, so taxes are kind of stressful to a lot of people. I'm a nerd. Let's be honest. I'm a numbers nerd. I like numbers. Most people are not like me. Can we just confess that right up front? Most people are not like me. So for most people, taxes are stressful. I mean, it kind of gets our blood pressure up a little bit. We get stressed out, and we are so glad when it is behind us. And unfortunately, the fact that you have a side hustle or the fact that you're an independent contractor and have your own business makes it a little bit more complicated than maybe it was if you didn't have this before. But the good news is you're your own boss. You own your own business. And as Hako said before, you're now able to deduct things that you were never able to deduct before. So there are some real pluses to being your own boss and to working for yourself. But you do need to be aware that there's a little bit of additional complexity in your taxes. Namely, you're going to need to file a schedule you probably never had to file before unless you've done this in years prior, and that is called a Schedule C. It's a business tax form that says, hey, I have a business, and you file that with your tax return. So it's not an additional tax return, assuming that you didn't go out and form a corporation or anything, which I would hope none of you did for this purpose. But you're going to file as a sole proprietor, meaning that you're self-employed, on a Schedule C. So that's the main thing to be aware of. Just in general, your taxes are a little bit different. You're self-employed. Now you're going to file on a Schedule C in addition to the normal things that you have always filed before. So just slightly more complex, but we're going to help to simplify it as we go through. So one of the things that you'll notice on your Schedule C is that car expenses is a major part of the deductions that you're going to be able to make. For all of you, you are in your cars like all the time when you're working, right? You're driving. So you're putting mileage on your vehicles and you're having expenses related to the maintenance of your vehicles. We're going to show you how to track those two things and figure out what works best for you. But there's a question here that I think confuses a lot of people. And so I want to talk about it. And that's this question number 43 that you see here that says, when did you place your vehicle in service for business purposes? So the quick answer here is that whatever day you started using your car for the purposes of your business, this is the date you put here. So for example, I started dashing July 1st of 2019, then I would put 07/01/2019. But what if, Knox, I started dashing in 2018? Do I just put 01/01/2019? No, I'm going to put whatever the date was in 2018 when I started to use that vehicle. Another question we get sometimes is, well, what if I change vehicles? Or what if I use multiple vehicles? We're going to fill out one of these Part 4s for each vehicle. And so for each vehicle, you're going to say, this is when I placed my vehicle in service for business purposes. And the good news is Everlance will help you to track those multiple vehicles if you happen to be someone who uses multiple vehicles. Anything you want to add about that, Hako?
I do. So I was looking at the questions that people submitted before the webinar, and there's a couple questions about what if I drive for multiple platforms? You know, maybe I'm doing DoorDash and Caviar. Maybe I'm also doing Postmates and Grubhub. Do I put these on separate Schedule Cs, on one Schedule C? How does that work?
Great question. Yeah. So that's going to all be on one Schedule C because it is all kind of in the same shared economy or gig economy space. So it's basically doing the same work. So it just means that you're doing the same business. You're just doing it for multiple entities. For example, we'll just use what Hako used. I'm doing it for DoorDash. I'm doing it for Caviar. I'm doing it for Grubhub, Uber Eats, whatever the case may be, right? So whoever you are doing work for, you're going to include all of those into a single Schedule C, assuming it's the same type of business. Now, what you're not going to include on the Schedule C is your W-2 income. So say, for example, you still have a job, you get a W-2, you do not add that into your Schedule C. Your Schedule C is simply your self-employed business work, and that's going to go onto your Schedule C.
Awesome, awesome. And then some people also asked, you know, will I get multiple 1099s? So, you know, that's for sure, right? So you'll get a 1099 from each different platform that you work with, and you add up all the numbers and you put them all into one Schedule C. I just want to clarify that.
Yep.
Cool.
Awesome. So when we deduct car expenses, there are two basic options. The first is the standard mileage method, and the second is the actual expenses method. So the good news is that Everlance is going to help you do both of these. And we're going to talk some about what kind of mileage is deductible, because I actually just saw a great question pop in from April. So thank you for that one, April. April said, I've been told different things for this by different people, but I live an hour away from the area I can dash. Is my mileage from home to there and back counted, or is that commuter mileage that I do not get to deduct? Good news for you, April. You do get to deduct that mileage as a self-employed person with your office in your home. So because you don't have a separate office, you're not commuting to a separate office, your office is considered to be in your home. That's your home base. That's your business address. So whatever work mileage you're doing originates from that location where you start, and then you're going to track everything. Great news for you. Everlance is going to help you to do that. And some of you are aware that, you know, the DoorDash app itself, the Dasher app, will track some mileage for you, but it will definitely not track that mileage. So this is one of the reasons that you definitely want to use an app like Everlance along the way. But there's two basic ways that we can deduct car expenses. We can do the standard mileage, or we can do actual expenses. So let's talk about the difference for a minute. On the standard mileage, all we really have to keep track of is our mileage. We don't have to keep track of receipts because our mileage includes in that standard mileage rate, and we'll show you what it is in a minute. For 2019, it's 58 cents, 57.5 for 2020, but we'll show you that in a minute. But what this includes is your gas, your maintenance, your oil changes, your depreciation, car payment. All of that is going to be built into the standard mileage method, into that standard mileage. So all you do is you track your mileage, you multiply it by X percent or X cents per dollar. So for 2019, it's going to be 58 cents. We do that multiplied. So, you know, 1 mile times 58 cents is 58 cents, right? And so on down the line. We'll show you an example of that in a minute. The actual expenses method, we have to track all our miles for this too. And a lot of people get confused and they think, well, if I do actual expenses, I don't have to track my miles. Wrong. You need to track your miles in either scenario because you have to apportion out the percentage of your vehicle that was used for personal use and the percentage of your vehicle that was used for business use if you're doing the actual expenses. So you're going to track every receipt that you have along the way. This is going to be your gas, your oil changes, your car maintenance, your depreciation is going to factor into this. We're going to take all of those expenses, then we're going to portion that out, based on the percentage of business use. So we'll show you kind of how that works here in a minute. But on the standard rate, again, we simply keep track of the business miles, then we multiply by the amount. We put up there for you 2018, 19, and 20. Some of you are still a little behind and need to finish those 2018 taxes, so we gave you that rate as well. The great news about this, you don't need the receipts. Everlance is going to give you everything you need to be able to track for the standard mileage rate. The actual expenses method, in this case, again, we're going to calculate the percentage of personal use versus the business use and then multiply that. And I think we have an example in here, Hako, that will help to dive in on that. So, and we do, great. So the standard mileage rate, if you drove 3,680 miles for work in 2019, we simply multiply that by the 58 cents, and that comes to $2,134.40. That's your deduction. You're going to put that on your Schedule C. That becomes a deduction straight off of whatever you made, right? So, hey, Knox, I made $2,000. Do I still get to deduct the $2,134.40 for mileage? The answer is yes, you do. That doesn't always work out that way. Sometimes we make more, sometimes we make less, right? But that is a good thing there. On the actual expenses method, again, total car expenses were $1,750, but we drove the 3,680 miles for business, but actually 4,680 miles for personal. So what we do is we simply divide that 3,680 by the total mileage, which in this case is 8,360, and we get that the business percentage is roughly 44%. So then we have to multiply that 44% by the actual car expenses, and in this case, we could deduct $770. Now this is a no-brainer, right? Do we want to deduct $770 or do we want to deduct $2,100? Not a hard decision. The bottom line is Everlance will help you actually to track both, and you can see which works better for you. Or if you want to just hang with the standard rate, then you are able to do that as well. That is simply, it's by far the simpler way to go, and it frankly is a little more audit proof too. If you're using something like Everlance and keeping good track of everything, you're going to be in good shape with the standard rate method. Anything you want to add to that, Hakan?
I think you covered it super well. I just want to show actually a little resource for people to help them decide if you're still not sure, and also to help address the question that I saw in the questions people submitted, which is, what if I didn't track my mileage, right? A lot of that, like we hear that all the time. Like, you don't have to be ashamed. If you don't work in taxes, maybe you don't hear that you should be tracking it. So we have, sort of a good solution for you there too. So Knox, I'm just going to share my screen real quick. All right, cool. So this is a little, the Everlance Tax Academy, and you can find it at everlance.com/DoorDash and everlance.com/Caviar. And if you go to the top, the first one, all about miles and car expenses, this will actually take you through a little quiz. It's free for everyone to use that can help you, figure out what if I didn't track my mileage, and how do I pick between actual and standard. So we'll just go through this pretty quickly. First it asks you how many work miles did you drive in 2019. So for DoorDash, Caviar, everything all together. Let's say we did under 5,000. And then it asks you, do you want the easy method or do you want, the hard, like you're willing to do more work? Let's say I want to do the hard, right? So the recommendation will actually be, hey, try both methods and see which is better. Hey, I'm the one who picked that I wanted to do hard. But basically, if I click over here for the standard mileage method, this will actually tell me how to do it, including what to do if I didn't track. So if I go step by step, it'll say that the first thing you want to do is you can get your DoorDash mileage summary, right? So if you didn't track, the good news is that DoorDash still tracked a good amount for you. And I'm actually not sure on Caviar. I need to check that. But the good news, again, is that DoorDash did track a big amount for you. So if I go to this tab, can you guys still see here, Knox, the DoorDash dashboard profile? Cool. So if you go to driver.doordash.com, this is where you can see some of this information. You click on the little menu here, you go to stats, mileage, and over there, you'll be able to see your mileage. This is for 2018. I didn't do too much driving last year, but over here, you'll be able to download that, and that's great. Okay, so if you didn't track, you can still get a lot of your mileage there. It's good to point out though that DoorDash only includes while dashing mileage, right? So it's gonna, once you pick up the food, and bring it to someone's house, it's counting that mileage. Once you're driving to the restaurant to go pick up the food, it's counting that mileage too. So that's great. What it's not counting is, say you're driving around, trying to get into a good hot zone, trying to get into a good location where you'll get good orders. It's not going to count that in. It's not going to count in the commuting miles that Knox mentioned before. So, over here, we say advanced. It's a little bit hard to do, but if you want to do this, like again, Knox as a tax professional probably can't recommend this, but sort of me as more of like a regular person, I can say, hey, if you didn't track your mileage, you can spend a little time trying to figure out what are the eligible trips that that you can still claim, right? So you'll probably want to get a spreadsheet. You'll probably want to get out Google Maps, and you'll want to just add up what is my normal commute each time, how many days did I do it, that sort of thing. Like the IRS technically says you have to do it each day, but I'm just saying it's something that a lot of people do. And I know Knox will probably tell you, hey, it's better to not do that for this year and just focus on doing it better next year by actually tracking. So just wanted to point out a couple of those options. Anything to add there, Knox?
No, I think that's good. Just sort of to echo that a little bit, it is a requirement from the IRS that your mileage log is kept and the language in the code is contemporaneously. And so what that means, as Hako alluded to, is that your mileage log should be kept along the way. It's not something that you can reconstruct after the fact, and it's certainly not something that you can reconstruct once they say, hey, I'm going to audit you. So you want to make sure that you have a contemporaneous mileage log as much as possible. Everlance is a great option to make sure you do that. If you don't choose to use Everlance, make sure you use some method. I mean, you can do this stuff by hand, right? You can write it all down. I used to do it that way. I'm 44, so I'm not ancient, but I'm old enough that we didn't always have an app to help with this, right? And so when I first started in business, I tracked my mileage on a paper mileage log. It can be done. Do you think I track my mileage on a paper mileage log now? No way. This is easier, and frankly, I'm more consistent at doing this. Paper mileage log, my wife and I weren't necessarily always as consistent as I would have liked for us to have been about writing those things down. So, you don't have to use an app, but we think that an app more than pays for itself in the long run, because you're keeping track along the way. You're not forgetting about things. You're not stressed out trying to go back and figure it out. You definitely want to just do it the right way going forward. And in my opinion, the right way is using an app at this point. So I hope that helps to clarify that.
Yeah. I also wanted to answer a quick question from someone, or actually point out. So Diana in the chat is saying that she's been checking, and she did drive in 2019, but the DoorDash driver portal still doesn't have the mileage for 2019. So I'm sure that's coming soon. So probably in the next couple of weeks, it'll be there. And Knox, should we actually skip over this one and come back?
Okay.
Just because I'm seeing a lot of questions on when will I get my 1099 form? Like, shouldn't it already have been sent? So maybe we can answer those before we get to that. And I can take this, Knox, and you can help me out if needed. So basically, for Dashers, this is taken directly from the DoorDash help page. So if you go to DoorDash.com/help and you go to Dasher and you look up taxes, you'll be able to find this yourself. But basically what it's saying is that if you earned more than $600, then you're going to get your 1099 MISC form. It's just a form of 1099. For a lot of people, you already registered with payable.com. In that case, you'll get an email from payable.com that should be coming this week or next. If you didn't register with payable.com, then you should be getting it by mail probably this week or next, right? They're required to be sent out on January 31st. So, it probably should be coming in later this week if it hasn't already. So it sounds like for a lot of you, it hasn't come in yet. So again, if you register with Payable, look for that email. If you didn't register, look for the physical mail. And then if it was incorrect, if you don't get it by mail, like follow up with DoorDash support, or like you'll be able to view it electronically. So that's sort of the high level there. Okay, cool. And then the next one is, or one more actually, Knox. down for Caviar. So Caviar, it's kind of interesting because Caviar was bought by DoorDash in the middle of last year, right around November was when it actually went through. For the first part of the year, from January until October, you're going to get a 1099 MISC, because that's the way that Caviar used to do it. And then from November 1st to 31st, you're going to get a 1099K, right? So it's two separate forms. And Knox, correct me if I'm wrong, you'll be able to add up the income amounts from those and put them both into the same Schedule C. Is that right?
That is correct. And I want to mention that for those that are receiving 1099Ks, the threshold is significantly higher than the $600. And so you may not receive a 1099 at all, even if you are over $600 if your provider is sending a 1099K. And that's okay, because you still have to report it. So you should be keeping track of what you have been paid. But even if you didn't, you should be able to log into the app and sort of see the cumulative what you, or log on online to your profile and see cumulatively what you've been paid and put that on your tax return for your gross receipts. So you need to do that. Whether you receive the 1099 or not, then you need to include that. And that kind of goes to this question. So, you know, if I made less than $600, didn't get a 1099, do I need to file? The answer to that is yes. Even if you made more than $600 and didn't get a 1099, the answer to that is still yes. Sometimes I get asked the question, isn't there some point where you make so little money you don't have to file at all? And the answer to that is, as a self-employed person, if you made more than $400, you have to file. So for everybody on this webinar, I'm sure you made more than $400 during the year. I certainly hope. And so this is going to be a yes. You will definitely need to file for that. Somebody
and
asked,
Knox, just to confirm, sorry, or go ahead with that question. You got it.
Somebody asked a great question earlier about whether or not you could combine the 1099s from multiple companies on the same Schedule C. And we kind of answered that earlier, but this person, I don't actually remember who it was, it's not in front of me right now, but this person asked, what about if I did Uber or Lyft as well? And because that's not food delivery, but it's still sort of in the gig economy. And the short answer is, you can actually do that either way. You could file a separate Schedule C for your Uber and or Lyft business, and then another Schedule C for your other, or you can combine it and call it gig economy. And so either would be appropriate. Just make sure that you are consistent. I will tell you that I would probably file them separately in that scenario if I was doing the return. And there's a couple of reasons for that. Not the least of which is simply so that you can track what's making you more money, frankly, because those are kind of two different types of businesses, but it would also be legitimate to combine them and use the generic gig economy, shared economy code. So you could definitely do that as well. And you had a question?
Awesome. Yeah, I just wanted to confirm, you said $400 is the threshold. So if I'm someone that, you know, only tried out DoorDash and Caviar a couple times last year, maybe I only made $150. So do I not need to file at all in that case, pay any taxes?
No, you still do. I'm saying if your only income, the only income period is less than $400, and so you have no other W-2, you have no Social Security, you have no other income period other than, you know, less than $400 from Dash-In or fill in the blank, Caviar, whomever, then you wouldn't have to file. But if you have at least $400 of income, you're going to have to file.
Okay. And you're saying too that, say I have a job where I make, you know, $40,000 as an employee, you know, maybe I'm working at a retail job, and then I make $200 on DoorDash because I did it just for one weekend. When I do my taxes with my retail job for the $40,000, will I put in the $200 from DoorDash, or am I not required?
You are required. So yes, you are going to need to put that in. You still have to. Yeah.
So just to highlight that, no matter how much you make, maybe you make $50 from DoorDash, you only did it for one day, you still need to put that into your taxes when you file. Cool.
Correct. Yeah. And somebody asked about the 1099K a little bit. And so I alluded earlier, or I told you earlier, that there's a higher threshold, and it's significantly higher. So for the companies that issue 1099Ks, it's actually a $20,000 threshold or 200 transactions. And so if you have 200 transactions and $20,000, then you're going to get issued a K. But if you have $4,000 and 100 transactions, you're not going to get issued a 1099K for companies that are choosing to go that route. So just be aware that it's not always the $600. That $600 is true for non-employee compensation on the 1099 miscellaneous. And just as an aside, not that anybody cares, but for 2020, that will no longer show up on a 1099 miscellaneous. We're getting a new form. Well, sort of, it's an old form coming back. And that's the 1099 NEC for non-employee compensation. So it's actually going to get its own form for tax year 2020. But for the tax returns we're doing, it'll be on a 1099 miscellaneous or possibly on a 1099K. And again, if it's a K, many of you will not even receive it, but you still have to include it. And so you simply log into your account and find what you made for the whole year, and that's what you'll use on your tax return.
Right, that's a great point. And I also want to say, I know we're getting a little technical, with some of these 1099, MISC, K, different things like that. So, if you didn't completely follow that, no worries. Just ask us any questions that you still have, and we got you here. We're here to give you the technical information in case, you really want to get to that level, or just the really simple stuff in case you have questions. So please keep asking on the chat. Awesome.
Cool. So,
yeah, we got these. Cool. So yeah, this is a question that we've seen. Yeah, we've seen people ask this in the chat before. In the questions people submitted, people are saying, "Hey, how do I know? Am I gonna need to pay taxes? Am I gonna get a refund? What's the deal?"
Yeah. So the short answer is most people that have a W-2 get a refund, right? Because they have money withheld throughout the year. And so if you mostly have W-2 income, you're probably going to get a refund. We'll go to the example Hako just used. I did DoorDash for one day. I made $50. You're probably going to get a refund, right? Don't sweat it. But if you did only DoorDash, so that's kind of on the other end of that spectrum, you're likely going to owe unless you have big credits. So for example, child tax credit, the earned income tax credit, these are credits that can help to offset some of that in a big way. But the other thing is also your expenses. So let's go back to an example earlier. Let's pretend that I dashed and made 10,000. I'm just going to use nice round numbers. So I dashed and made $10,000 in gross income, but I drove 20,000 miles as a part of that dashing. Well, my 20,000 miles that I drove is actually going to give me a deduction that is more than the 10 grand that I made. And so I am not going to owe any tax on that because my net income is actually going to be zero, right? Or negative in this case, but you get the point. I'm not going to owe any tax because I don't have a large net income. So you're only going to pay tax on your net income, which is why finding these deductions is so important. And somebody else, Sylvia, actually asked, so I got my 1099, but I noticed that the service fees and other things that can be used as deductibles are not included on the forms. That's right. The 1099 is going to show you your gross amount. You're going to itemize those deductions on the Schedule C as expenses. And so a tax professional can help you to do that, or tax software can help you to do that. But you just need to be aware that that's what that's going to look like. And then for many of us, we have a W-2 job, but we also have a side hustle where we're doing DoorDash. Go ahead.
Well, actually, I'll clarify that on Sylvia afterwards. I think there's something else there. But yeah, keep going.
Cool. So some of us have a W-2 job and then also have the side hustle where we're doing DoorDash or Caviar or fill in the blank. And, that could go either way. Some of that's going to depend on the percentage of W-2 income versus your gig economy income. So, that could really go either way. But I hope that basic discussion helps you to get some idea of what that may look like and whether or not you're going to owe.
Right. Yeah. And just to echo some of what Knox is saying, if it's your first year, it really could go either way. So you'll probably have to it's good to plan ahead. That's why we recommend, and that's why we have that new product that Knox mentioned. We recommend that if you're an independent contractor, you put aside 20% of your income. We know that can be really hard to do. But if you're going to pay taxes, it's better to sort of build up those savings throughout the year if possible. Okay. And I just wanted to point out on Sylvia's question, this is actually something that I'm a little.
You muted yourself. There you go.
Muted myself. I actually had never seen it's a really good question. I think she actually said that in her 1099, DoorDash doesn't show the service fees and other fees, right? It does not show the service fees that Sylvia has charged, which would be deductions. So where can she get those in order to put them as deductions? It's a really good question, and yeah, I think I'd have to think about that. Whether, yeah, if she's only getting the net amount, then maybe it doesn't matter. Those deductions,
No,
deductions
I
have
think
already been withdrawn.
she should be getting the gross amount, but that the service fees and other things are not included. Sylvia, can you clarify that for us? Are you saying that you're getting the gross amount, meaning the total amount before deductions, or are you saying that you got a net amount, meaning that the deductions were already taken out? I'm thinking you're saying gross, but if you could clarify it for us, that'd be great, because Hako and I read that different ways.
Yeah.
So, yeah.
Awesome. Yeah, we'll keep going, and hopefully Sylvia will let us know. That's a great question. Either way.
Cool.
Cool.
So why record your miles? And this one's pretty simple, but Hako, I'll let you take it.
Yeah, so we had more text here before, and I decided to chop it down and just put this big money bag emoji, because really it's simple. It's to save a lot of money, right? So as we've been talking about, the more business expenses that you can claim and deduct on your taxes, the less you're going to pay, right? So as you know, you spend a lot of money on your car in order to do DoorDash, right? You're putting wear and tear on it, on your tires, on your engine, on your brakes. You're getting gas all the time, oil changes. All those things cost a lot of money, but the great thing is that if you track your miles, you get to simply multiply, hey, I drove 10,000 miles, multiply it by an awesome rate, 58 cents. I'm going to deduct $5,800 from my taxes. That's a huge tax deduction. So really, it's the best way to lower your taxes is simply tracking your miles. And actually, we haven't talked about this specifically. Maybe some people in the chat can let us know, are there any couriers here or delivery people who bike instead of use a car? Because it's a little bit different with a bike. I'm actually a biker myself, and Knox, you can correct me if I'm wrong here, but there's no standard mileage deduction for your bike. So unfortunately, you can't do that. But because it is your main mode of transportation for work, you can deduct the cost of maintaining your bike. So if you, take it in for tuning, if you are, buying new chain, new inner tubes, those sorts of things, those are all work deductions. Knox, would you agree? Would you agree with that?
Yes, I would.
Cool. So yeah. Oh, and I just want to get to this question because Jose has asked it twice now. So Jose, sorry we didn't get to. He's saying, and it's very related to this. He says, can I have a starting point in Mexico to track my miles? I live in 2 locations, in Victorville, California, and Tijuana, Mexico. Therefore, I dash in 2 cities in California. But sometimes, so basically, sometimes he's going from Tijuana, Mexico, to San Diego. I see no reason why you wouldn't be able to. Knox, I wonder what you think.
Yeah, so let me break this down a little bit further and help everybody to understand what I think the question is. And then Jose, if I'm not interpreting your question correctly, then clarify. So this is also to make sure I'm understanding what you're saying. I think what he's saying is that he lives in Tijuana, but comes over the border and dashes inside the US. And so what he's asking is, can I begin tracking my mileage in Tijuana and deduct all of that mileage, even though a portion of it is outside of the United States? Is that the way you interpreted that too, Hako?
That's right.
Yeah. And the short answer is yes, as long as you're filing it on your U.S. income tax return and it's a U.S.-based business and all of the business is taking place inside of the U.S. in terms of where you're earning the income, then the answer is yes. If you are earning some of that income in Mexico, it's a more complex answer, and I would need to consult with you one-on-one on that.
Sounds good. Cool. And this next slide, by the way, it should say which miles are deductible. And we've already, covered these, but just sort of high level, just to remind you, the first one is whenever Dasher or courier mode is on. So DoorDash is going to track those for you, but still not all of them, because if you're driving between orders, that's not going to be tracked. So that's why it's good to track it separately. as Knox talked about, the commuting, that can be a big, like someone on this chat said they drive 1 hour between home and dashing, or maybe even Jose, you know, going from Tijuana to California. That's all deductible mileage as well. And also when you're taking care of your car, so you're going to gas, maintenance, car washes, all that is deductible as well. Cool. Anything you want to add, Knox? Awesome. And here we just want to throw in a little shout out for Everlance. Obviously we mentioned it, but we think it's the best way to track your mileage automatically. You download the app one time and it'll track everything for you. All you need to do is, it is good to open up the app every day or every week, just to make sure everything's getting tracked, and then swipe to say, hey, that was a work trip for DoorDash, that was a work trip for Caviar, that sort of thing, or like that was personal, so basically delete that. So that's basically how that works. And finally, so actually Jake here is asking, are you guys going to fill out a tax return over this webinar? Unfortunately, we're not. That'd be kind of cool. But instead, what we're going to do is set you up with some really good resources and discounts for filing your tax return. So we're going to give you a couple options for doing it online and for doing them with a professional. So on the online front, I'll cover that. Someone asked before, do I need to use TurboTax? So TurboTax does have a partnership with DoorDash this year and with Caviar. It's, you know, they have a nice discount. It's a great piece of software, so you totally can. You're not required, right? You can go with whatever option you want. So, you know, here we're picking on TurboTax a little bit because they like to say that they're totally free, but then when you're self-employed, the fees start adding up. So what's pretty cool is that together with Credit Karma Tax, we're actually offering 100% free tax filing for everyone, no matter what your situation is, even if you're a super complicated self-employed person. So if you like doing things yourself, that can be a nice option there. So you would just go to that link there, bit.ly/ever-ck free, and I'll put that in the chat. And yeah, and if it's your first year, then, and you have a lot of questions and you have multiple sources of income, it can be a great idea to go with a professional. You know, it can cost a little bit more money, but you can actually save a lot more on your taxes because you spent that extra time and you went with someone that really knows how to get you all the deductions. So I'll let Knox talk about his option as well.
Yeah, so you can check out gigeconomytaxes.com, and we'll talk a little bit more about that in a minute. But, you know, Credit Karma, the great thing about this is it's free. I have not personally used it. Obviously, I use professional tax software, right? But I know some of the executives over there, and they're good guys. So, or actually, it's a gal, but they're, you know, they're good people, and so I would expect that they're going to do a great job if you know what you're doing. The great thing about software is you just need to know kind of how to answer the questions, and you need to know what you don't know sometimes. So if you get into a situation where you feel like you don't know exactly how to answer all of the questions, or you just want the ease of knowing that you have a professional who's going to help you walk through all of this, then I'm happy to help you with that. But either way, I have an email list, a newsletter list that we send out related to taxation on the gig economy or the shared economy. This is specific to U.S. taxation, obviously, and you are not required to use us in order to subscribe for the updates. It's free, but if you do subscribe for the updates, then you get a special discount on your tax preparation. So if you use Everlance, or if you agree to use Everlance moving forward, either way, we'll do it for $200. If you don't use Everlance, it's $250. And you say, well, why is there a $50 difference there? The short answer is if you use Everlance, then your mileage and everything's going to be organized. And so it takes us less time, and so we can charge less. And even if we know that you agree to use it going forward, we look for you to be a customer for a long time. And so we anticipate that. We have and you know, our return rate's like 93%. People are generally pretty happy when they use us. And so we know that over the long haul, we're going to save money. So if you agree to use Everlance, then we will go ahead and reduce that down to $200. So again, it's gigeconomytaxes.com, and you can go and sign up for that newsletter. If you sign up for the newsletter, then you'll get an email probably tomorrow. There's about a day delay, but you'll get an email tomorrow. And then at the bottom of that, there'll be a link if you actually want to use us to do your tax preparation, where you can sign up to do that. But otherwise, you're just going to get regular updates related to what's happening in the tax world during tax season anyway, and the gig economy. So if you're interested in that, we're certainly happy to help you. And I will let Hako talk about Everlance again. You're muted, Hako.
Awesome. Yeah, we can go through this one really quickly. Just wanted to say that we have a special discount for Dashers and for Couriers. So here we're just showing the Dasher example. If you go to everlance.com/DoorDash or everlance.com/Caviar, you'll be able to download Everlance there and get it free for 3 months. So Everlance, the way it works is you can use it free forever. If you're a casual, maybe you don't really drive too much for work, or just once in a while, the free version is probably good. If you're sort of a road warrior, you're really dashing and doing Uber Eats and Lyft and things like that all the time, the paid version is $8 a month, and it's probably going to pay for itself in terms of deductions. And we give you 3 free months of that through this partnership. And yeah, so next steps, we're just gonna cover a few quick things here, some quick hits, and then we're gonna get to, I think, my favorite part of the webinar, which is just going through rapid fire of questions. So start thinking, if you have any questions that we haven't answered, any things that are still not clear, please throw them into the chat now. Yeah, because we're just gonna go through those really quickly to make sure that you walk away from this feeling prepared. So basically the next steps is you're gonna get a summary email and text with a bunch of these links so that you can go watch this recording again, so that you can look at these slides, everything like that will be in there. Let's see, and if you have any questions that we don't get to answer today, then it'd be awesome if you went to bit.ly/ typing this in, tax Q. And if you could throw in any questions there, we will answer those by email later. Also, any feedback there would be awesome. And as a way to encourage you to give feedback, if you go to that link right now, right after this call, and you just fill in feedback, it takes like 30 seconds, we'll put you in a drawing to get $30 Amazon gift card. And as you can see, there are only 60 people here. Usually only like 10 or 20 actually do the feedback. So you have a pretty good chance of winning $30. So I would recommend that you do that. And yeah, any other slides here? All right, cool. Let's get to the fun part of the rapid fire Q&A. So I see one from Lori here. The last thing I got is the cost of Everlance deductible? And it absolutely is. So that's a great thing. Let's see, what else do we see here? So Sylvia's asking,
While you're looking at her question, Malik asked, do you generate your tax report strictly for your tax accountant to do all the work for you? And the short answer is yes. If you're using the tax accountant, then yes, we do a lot of that. Obviously, if you're not using the tax accountant, then you have to use that information as you're entering in the software. So hope that helped to clarify.
And also to clarify for Malik, so if you don't have like an Everlance tax report, when you go work with your accountant will ask you, well, like, do you have a mileage log? Because I require this in order to put this into your taxes. And if you don't, then either your accountant will be able to do it, or like you'll have to do a lot of work to like figure out, where's my mileage log, and like build that yourself. So that's sort of the advantage of Everlance is one click, you have your entire mileage log, you give it to your accountant. Your accountant's happy because he or she saves time. They don't have to go figure that out with you. It's already right there. So that's basically how that works. And Nicole, I think that's why I was confused. She was asking, do we partner with Uber Eats? So right now we partner a little bit with Uber. So if you go to everlance.com/Uber, we have a 1 month partnership there. So it's not as big as a DoorDash or Caviar partnership. But even if we don't partner with someone, you can still use Everlance for anything. So like maybe you like to design jewelry on the side, maybe you work as a babysitter on the side, whatever job you do, Everlance will help you track those miles. So yeah, Knox, maybe you can take this one from PC. Are repairs on your car, wear and tear, tax deductions for DoorDash?
So the short answer is yes, if you're using the actual expense method. So remember, you're going to use either the standard deduction or the actual expense method. And if you're using the actual expense method, then you still have to track your mileage, and you're going to use the percentage of use for business. So for example, 10,000 miles, 4,000 of which was business, 6,000 of which was personal. We're going to use 40% of your expenses would be then deducted, is kind of the way that that works.
Yeah. So yeah, like high level, absolutely is deductible. It's included in the standard mileage rate. So if you're using that, you don't need to track it, which is pretty nice. Galaxy's asking again, what if you didn't track your miles? So we covered that before. Check the recording, and some of the follow-up links will have a good link for how to take a little quiz that'll take you through that. But the high level is DoorDash tracks your some of your miles, so that'll be a nice start for it. Let's see, anything else here looking above that we haven't covered? This webinar is being recorded, someone else asked. So unfortunately, Everlance cannot track miles retroactively, Brittany, to answer your questions. But we do have resources to help you figure out, what you might have been able to track, that sort of thing. So, but really it's going to be about from now going forward. Justina Ricks is asking, can I use Google Maps history, which also tracks miles? So yeah, that actually does work. So if Google Maps was tracking your phone all the time and you have it all there in your dashboard, then that is contemporaneous. So I would think from the IRS perspective, that actually would be allowed. It's not as user-friendly as Everlance, because it's not meant to track your miles for taxes, but you can totally use it.
Yeah, let me just go back and say that you would then have to go in and say, okay, what if this was personal and what if this was business, and what was the business purpose for it? So, okay, I was dashing here, I was doing Uber here, I was doing Lyft here, I was driving to my W-2 job here, I went to the grocery store here, I went to church here, I went to the airport here to go pick up my cousin. How are you going to know exactly what all of that was 6 months after the fact? If you can figure it out and keep track of that, then yes, that will work. But just be aware that you have to know all
that. Right. Someone else was asking, how do I find out how much money I made for DoorDash or Caviar? So you want to go over to your dashboard. So for DoorDash, it's driver.doordash.com. For Caviar, it's, I think, try Caviar. I'll get you that link in a moment while we answer any other questions. Yeah,
So I'm seeing some more questions about car expenses. So that tells me I didn't do as good a job as explaining it this time as I usually do. So if you do the standard deduction, meaning that you do for 2019 the 58 cents a mile, then you don't deduct anything in addition to that except for tolls and parking. So you're deducting your miles times the 58 cents plus tolls plus parking. If you are doing actual expenses, then you're adding all of those expenses up together. You're still tracking your mileage, and you're taking all of those expenses multiplied by the business percentage of the car. And the way you determine that was you took your business mileage and deducted that by your total mileage. And so that's kind of the way that works. And yeah, he's got it right there on the screen. So hopefully that helps to kind of clarify that. But that's going to be true for gas, car insurance, roadside assistance, maintenance, to answer Desiree's question. All of those things are included in the standard mileage deduction, meaning you don't take them in addition to, or on the actual expense side, you can only deduct the business percentage. So it's going to be one or the other that you take. The simplest for most people in the gig economy, especially if you are driving a not super expensive car, is going to be the standard mileage deduction. However, there are some people for whom that's not the case. If you had a head gasket you had to replace, and you also had to replace a transmission this year and all sorts of things, then you may be in a different category. But for most people, the standard mileage deduction is going to be the better choice.
Awesome. Interesting question here from Tyler. He says, basically, do I have a higher chance of being audited if I use a tax professional or tax software?
Wow. So the short answer is I don't have the real answer to that. I can tell you that it's definitely not a higher chance of being audited using a tax professional. I'm hesitant how I want to say this. I will tell you that 80% of the audits that we do, and a lot of what I personally do is represent taxpayers who get in trouble, by the way. So when they get really behind with the IRS and the IRS is coming after them, or in exams, which is an audit. And about 80% of those are self-prepared, meaning they were prepared without a tax professional that end up kind of coming in our door and being in big trouble. So now that's only, our experience in one firm, so I can't say that that necessarily goes across the entire country. But in general, I can tell you that there is a higher percentage of self-prepared returns that are audited and examined. And the reason for that is simply you don't know what you don't know. And so people kind of do dumb things on self-prepared returns. And the software will only do what you tell it to do. Software is great, but whether it's TurboTax, Credit Karma, TaxAct, fill in the blank, TaxSlayer, any of the other self-prepared ones out there, they can only fill in the blanks with what you answered in the questions. And so if you mess up, they mess up. So for whatever that's worth.
Mm-hmm. Yeah. That's great. Someone else is asking, does the standard deduction include car insurance? It does. So that's great. Someone is asking, Knox, can your firm do my taxes? I'm in Ohio. And the short answer, or I know Knox will say yes, absolutely. So
yeah. So go to gigeconomytaxes.com, sign up for the list, and then you'll get information on how to reach out to us.
Yeah, Lisa here is asking a pretty technical question. She says, if you use the standard mileage 1 year, can you use the actual vehicle expenses the following year? It's
a great question. And the short answer is you cannot flip back and forth. And so you really need to, for the most part, how shall I say this? Pick one and go with it, which is why I really think that for most of you, you're going to be better off with the standard mileage deduction. You can change one time over the course of the life of the vehicle and only in one direction, and those rules get a little complex as to how far in. So I don't want to overly go into that. But for the most part, you want to stick with what you can't go back and forth every year.
Right. I think we've gotten most of these. Yeah. All right, cool. I'm feeling good. And we're just over the hour mark. So I think we'll end it here. Again, if you have any remaining questions that we didn't answer, please just put them into that link that I'll put right here. You can also put any feedback there. And again, you'll have like a 1 in 20 chance of winning $30. That's kind of cool for just 30 seconds of work. Also, you can always email me with any questions. I want to make myself available. So there's my email right there. And yeah, thank you all for being here. We hope this was helpful, and we hope that you have a lucrative and healthy year, and wish you all the best. Thanks, Knox, so much for doing this.
Chris was asking if we answered his question. It was answered earlier in the webinar, so go back and watch the recording.
Awesome.
Cool. Thank you all.
Thanks, everyone. Thanks, Knox. Cheers.